Alright, this is my Robinhood portfolio. We're going to do a little bit of a portfolio analysis here. I plan on doing one for the Robinhood portfolio, and likely we'll talk about my M1 portfolio in a separate video, so we'll just start with this. I think a great way to get started, obviously, is going to be looking over at the lovely NASDAQ Smart Portfolio. It's a beautiful thing, shows you everything going on with your portfolio. If you go to this little My Portfolio Analysis sector, and again, you can manually put in all your stocks, trades, everything like that, or you can go right ahead and do whatever you need to do as far as uploading your portfolio to it. So it takes most brokerages actually, so it's a pretty neat feature. So if you look at this, obviously it'll tell you what I have. I've got 38 stocks. It gives it down by breakdown. 94.71 in stock, 5.2 in ETFs, and a tiny bit of cash on hand, obviously, because I usually put most of it. By sector, you see tech, financial, consumer goods, services, healthcare. Tech obviously being the biggest portion of the portfolio. Big holdings being Facebook, Apple, Microsoft. You know the business. What I really like here on the right hand side, obviously, you see, if you've seen any of my previous ones, this beta, which is pretty much the risk level of the portfolio, is at a 1.21. Average is right around 1.2. This has gone up substantially since the last time I made a video, and a lot of that obviously is because when you look at this quote-unquote financial tab, it's going to be all the real estate investment trusts that I own. These stocks have become a lot more volatile as of late, and really their beta has been increasing quite a bit, and that's why you see a big rise. Typically, I'm a very low risk individual for most part in my portfolio, usually around 0.6. My beta was 0.6 to 0.8, around that region before this downturn, and now it's pretty crazy. So but overall, right under that, you see dividend yield for the portfolio at 3.85%, and that is including companies that have cut dividends. So it was a lot higher actually previously, but it's including companies that have cut dividend. And overall, an estimated annual dividend of $655, and that is again off of a $17,000 portfolio. So I'm okay with that. 3.85% is a nice little yield. So let's look at this portfolio, do a little analysis of it. I will say one big thing that I've been able to do, and thankfully Robinhood has rolled out the dividend reinvestment program, and I am all over that. So you'll see some weird fractional shares, and a lot of that really is because of that dividend reinvestment. So I really am a big fan of the program. So let's start here with Apple, one of my biggest holdings, naturally. So Apple right now, you see my cost basis is $168.44 on Apple. So my total return is $880 or 104%. So double my money on this position so far. Very proud of this one, and it's one I plan on obviously just continuing to hold. It's around 10% of my portfolio. 5.013 shares. I'm going to plan on holding it for that dividend amount specifically, and you see obviously as the dividend keep paying, I keep getting more shares. So the dividend is going to be key with this company, and I love it. Next up on the list, I start with the powerhouses obviously. Then we have Disney, average cost of $99.25, which means an overall total return of $129 or 18.69%. So good overall position in terms of that. I like the return there. 4.75% of the portfolio. Gotta love it. I will say all time on this portfolio too. It's fair to mention I'm up 24.89. I should mention that obviously. 24.89% of the portfolio, right around 25% gain, and I started this bad boy in July of 2017. So like it. We're moving on to the next stock here. Let's do it. Facebook, really my largest holding. $165.29 per share on this one, for a total return of $615 or 41.35%. Really proud of this position, and I'm excited. I really like this cost basis, and I'm excited to see what the future holds. I think it's going to be a very, very delicious future. Let me tell you that. The gains are going to be out of control. 9 shares at 12.1% of the portfolio. I love to see it. After that, that's right, we keep going into the powerhouses. Microsoft, average cost at $92.34, which is a total return of $423 or 105%. So good, doubling the money on this one as well. Really like Microsoft, and I plan on holding it again for the dividend. It's a beautiful one, 4.75% of the portfolio or 4.339 shares. The dividend's beautiful on this one, so I plan on holding it and letting the dividend just keep, earning me more. Next up, I organized it kind of. We're text with tech. Financials with financials. It makes somewhat sense. Next up is a newer position of mine, Cloudera. Average cost basis on this one is $7.90. 15 shares or 1% of the portfolio for a total return of $73 or 61.72%. I plan on holding this one actually a little bit longer. Let's see if I can see the history real quick. When I made the initial purchase was March 11th, and then it went down some more, so I went and purchased a few more shares when it went down later in March. So pretty happy with this one. Gotta love it, and I plan on holding it. Not a dividend payer, but I think there's a lot of upward movement room. Obviously, 10% gain today is pretty nice, but I think there's a lot more room for upward room when we're talking about long term. Next up is ABBV, 71.81 per share there. 4 shares, 2.1% of the portfolio. Total return of $86 or 29.62%. So, again, a beautiful dividend champion. Numbers bugging out. It was weird as can be. Next is I love saying Gillette. It's Gilead. I know it's Gilead, but I'm saying Gillette, baby. $70.33 average share cost on this one. Right around cost basis there. 3 shares, 1.28% of the portfolio. Total return of $10.94 or 5.19%. It is obviously a larger return if you account dividends for this company because it's another nice dividend payer. This is a stock that I certainly would be willing to purchase more of. A lot of these stocks, I got to be honest, the price point it's not where I want it to be. My cost basis is low on a lot of these, and I'd like to see a little bit more downward movement before I start buying in heavy into some of these places or some of these companies. So overall, Gilead is one that I am willing to invest in right now, and I would like to pick up a little bit more in terms of that. So definitely one I'll be looking at when I deposit some money next week. I do $50 a week into this portfolio, sometimes more depending on how I'm feeling, but it's at least a minimum $50 per week. After Gilead, we have Ford Motor Company. Definitely what I would consider an L of the portfolio. Pure loss here. $9.76 per share. 60 shares at 2.2% of the portfolio. Down $193 or 33%. This is what I would call an L. Ford is one that I am 100% willing to purchase more of. I'm not excited to because of the dividend halting. I don't like dividend suspension. I don't like it. And I think obviously long term it's a company that's going to be around. There's no doubt. Ford is one of those companies that will be bailed out to eternity if they have to be. I don't think they necessarily will, but I think it's not bad, all things considered. So after Ford, we have New York Community Bank. And this one is overall cost basis of $11.46, 20.36 shares, 1.2% of the portfolio, down $24 or 10.5%. Not a good one as far as that's concerned. One of my only real financial stocks in this portfolio. One of the most really the original stocks that I've had. Nice dividend on it, so the dividend's getting me fractional shares, and I'm okay with that. Not looking to really purchase more, but one that I would probably put more into other financial companies before I did New York Community Bank. Target cost basis $73.25, 4.55 shares or 3.1% of the portfolio. Really want some more Target. I really do. I just want this to fall under 100, and I would plan on adding some more. But my cost basis is so low, sometimes it's hard to make those purchases. Overall total return of $204 or 61%. At one point, I was up 100-something% on this one, but it's fallen down quite a bit, as really the whole market did. So after them, another retailer in Kohl's. Kohl's, my cost basis is $29.83. Clothing retailers got hit harder than really anyone, in line with the airlines and the cruise companies. So shares, 7.917 shares, weird fractional shares here. 1% of the portfolio, down $54 or 22.89%. Definitely one I'm willing to add more of. Kohl's, it's a company I like, and I like it long term. So I've been trying to add in more onto Kohl's as I get the time to, and just partial really through a dollar amount, getting partial shares. Next up, another retailer, clothing, is Tapestry Brands. Average share price of $18.17, 18.8 shares. Total return down $71.5, or 20.86% down. Another one that I'd be willing to purchase more of as well. I like the brands that the company owns, but just it's such a weak point right now. I don't think I think it'll sit at this value for quite a little bit, so I probably can even later on get shares for the same price. So just waiting on it. A newer position after this is Stitch Fix, another clothing. This one's a online retailer though. My apologies. Cost basis is $15.36, 8 shares, 1% of the portfolio. Total return of $64.96 or 52% up. So I like that. Do like Stitch Fix, and I plan on holding it for a decent little bit. Following Stitch Fix, we have Home Depot. Only one share of this. $158.50, one of the original companies I've owned in this portfolio. $158.50 per share, 1.39% of the portfolio. Total return of $82.92 or 52%. Not one I'm necessarily holding expressly, as far as planning on purchasing, but dividend-wise, I'll let the dividend reinvest in this company, just because that my share. When your cost basis is so low, it's hard to raise it. But following Home Depot, we have Coca-Cola. Just a classic holding here. $45.24 per share. 5 shares, 1.3% of the portfolio. Total return of 5.3 or $5.30 or 2.3%. So definitely one I'd be okay with adding more of at these levels. Really, the dividend, again, the dividend's the story for this company, and I can't wait to get partials, shares from dividends, but it's a very good long-term holding. I like me some Coca-Cola. Following Coca-Cola, another drink-type company, in Starbucks, average cost of $52.39, 2.01 shares, 0.89% of the portfolio. Total return of $50 or 47.5%. Gotta love it. Starbucks is one I want to add more of, but I'm not excited at these levels at the current, just really with how the business is doing and the overall impact that's going to happen. I don't think the shares are going to really be skyrocketing here in the near future. Following that is iRobot. One that I'm relatively close to cashing out of. I gotta be honest with you, after today's 10% jump. I may be cashing out of this position shortly. $46.91 per share. 8 shares, 3.8% of the portfolio. Overall return of $287 or 76%. Give me a little agua, por favor. I feel like $1 million now. I feel like $1 million. A little water never hurt. But iRobot may be exiting that position soon. There is no doubt. They just recently announced that they were going to have a lot higher than expected Q2 revenues, so I'll hold on a little bit longer. That's why the stock jumped today. But After then, Micron, average share price of 45.19. I have 10 shares, 2.8% of the portfolio. Total return of 42.45. 10% total return, close to 10%. I, I see it as potential here in the relatively near future. By the end of the year, I think this thing will reach 60, and this time when it reaches 60, I'm probably going to cash out on this one. I'm probably going to end up selling my position, even though I think it can go a lot higher. But one that I've been holding for a while, and it's not like a dividend payer, so it doesn't really give me much action. But if I can lock in at $60, I probably will. Following them, we've got Cisco. You gotta love Cisco Systems. Average share price of $36.98. 3.025 shares. 0.79% of the portfolio. Up $26 or 23%. Nothing massive here. A company that, again, I just like. I'll own for the dividend, and it'll keep paying me. I like the company long term because I don't think they're going anywhere. And not really excited on expressly buying more of the shares either. So I'm just going to let it sit there. Garmin, this is a position I opened literally just to track an options trade that went successfully. All right. So the share was $79.74, 0.5% of the portfolio. Overall return of $13.83 or 17.34%. So again, I'll hold this one for a while. I do like Garmin. But I don't really plan on adding more to that one share. Sorry, it's going to be a little bit of a bothersome one to some people. Analog Devices here, average share cost of $79.27, 1.0049 shares, and that's because of dividend reinvestment. 0.69% of the portfolio. I couldn't skip that one. Up $39 or 49.48%. Again, one that I plan on holding. Really just for a while because it's not hurting me at all. It's earning me a dividend, so I'm not upset with it by any means. And with that reinvestment, ooh baby. Following them, one that I recently added on to was HPQ here. Average cost on this one of $18.08, 10.8 shares, 1% of the portfolio. Total return of I'm down $13 or 6.7%, I should say. I just added on to it. Really not one I'm going to add on more beyond just what the dividend pays out for the company. So, it'll be definitely a holding I keep for a while for this one. So, HP, I think the future will be bright for it. Just the time being, I don't like it that much. So, I think it'll be weak for a while, I should say. I think the levels will be weak for a little bit, so I'm not necessarily dying to add on, but it is one that I will add on, obviously, in the future. Compared to just how expensive other stocks are, it's freaking cheap in terms of valuation. Activision Blizzard after that, cost basis of $56.78, 2.011 shares, 0.85% of the portfolio, up $33 or 28.89%. Good core holding, love it, love to see it. Gonna get that dividend. Not a great one, but don't plan on really selling this one or adding on to it right now. TD Ameritrade, definitely a position I was very proud of at one point. We talk about when I picked it up. So you see average share price of $33.08. I picked it up right here when it dipped, whenever all these brokers went to commissions-free trading, and it went up to $50. Didn't sell out. Right now sitting at $39.83, so I'm just kind of holding it. They're a good dividend payer. 4 shares, 0.93% of the portfolio, up $27 or 20%. Nothing crazy. I'll plan on holding it because I'm confident in the company long term, and they're a good dividend payer, so I like the company. Whoopsies. Following them, we get into the real estate investment trusts. My favorite one here being obviously the lead off in Realty Income, $54.40 per share, 20.178 shares. A lot of those partial shares are purchased based off of dividends. 7.82% of the portfolio, up $164.91 or $164.91 or 15%. but with dividends, that percentage gain is a lot higher. We talk about, look at this, $4.70 monthly getting paid to me. Ooh, baby. It's the monthly dividend company, and it's beautiful. With that reinvestment, I'm super excited because ideally, I can get around 1 share per year if we talk about their dividend reinvestment. And with that, just continue to get more and more shares. So, and that's on top of just obviously just normal buying as well. After them, Iron Mountain, really my second favorite in this portfolio as far as our real estate investment trusts, $33.10 per share, 699 shares, 4.2% of the portfolio, 4.4% of the portfolio, I should say, down 149 or 16% down. I plan on adding more of this one relatively soon. It's below cost basis, and I really believe in the long-term vision of this company, and they're still paying out dividend consistently. So Iron Mountain's probably going to be getting another few shares added onto it this week, just so you know. Probably not, well, what's today? Monday? I didn't add my $50 yet, so it's probably getting that on. That's right. I'll probably add some tomorrow. Bring that up to 30 shares potentially. Next is Omega Healthcare. Just a pure beast. $28.02 per share. 20.48 shares. Consistent dividend payer. 3.76%. Total return of 78.05 or 13.6. I really wish there was an easy way to show dividend on here, but if you look at the history at least, you can see 13.40 every quarter from this company. If you add that up, I mean, I have a lot higher percentage return just because this thing it's been a beast. I love it. Following them, ABR Arbor Realty, average share cost of $7.93, 65 shares, 3.63 of the portfolio, $114 up, or 22.25%. Very high yield on this one, it's right around 12%. And you see here, $16.50 every quarter is what I'm getting on this company. It's really a beautiful thing. Really a beautiful thing. Following ABR is one of the highest beta companies I have right now in Apple Hospitality. Hospitality stock, again, you talk about hotels, so that's why it's really been hit so hard and so volatile. $14.73 per share, 60 shares, right around 4% of the portfolio. Down $206 to 20 and over 23%. Definitely one I would like to add on more of. I am in my other portfolio adding more of it. But I think the industry is certainly going to be weak for at least a solid couple more quarters. So not one I'm urgent about adding back onto because I think it could fall in the short term. After Apple, we have Apollo Commercial Real Estate. There's a company. Love it. $14.72 per share. 20.98 share. 20.98 shares is what I meant to say. Okay. 1.2% of the portfolio. Not much. Down 95. 33 or 30%. And again, a very nice dividend payer. 18% on this company. Again, this is $8 per $8 every quarter, and we're talking that's just based off of a total investment or a total price of $200. You gotta love that. It's a good return on investment. Definitely one I could consider adding more of. These real estate investment trusts, they're pretty cheap right now. Trust me. And for justifiable reasons, though. NRZ, another one. $12.66 a share, 15 shares, 15.12, down 65 or 36%. Again, dividends been lowered substantially on this one, down to 5 cents per share. So definitely a big dividend cut, but I do believe they'll raise it in the future. Not one I'm necessarily looking to add on more in terms of share count. So I'm kind of okay with where it's at right now. Sitting in the portfolio, still paying a dividend. So following them, PSEC, Prospect Capital, $6.13 a share, 30.68. What a dividend beast here. 0.98 or 0.93% of the portfolio, down $25 or 13%. If you include dividends, I have certainly I'm certainly over on in terms of cost basis, but $1.84 getting every month for this company. I gotta love it. They are a beauty. The next ones I think we can skip over. I'll show you on the right hand side. They're ETFs. SPHD, high dividend fund, 5.68 shares, monthly dividend payer too. SPYG, it is the Spider Growth Fund. SPYD, another Spider Dividend Fund, which is small caps or mid caps, I believe. 5 shares of that. KBWD, which is a high yield financials. 9.81 shares, another monthly dividend. KBWY, monthly dividend, 9.69 shares. Love that one. I added some more to that recently. This one is the REIT, high dividend yield one. DIV is the super dividend fund, 4.09 shares. DES, that's right, another mid cap or small cap dividend funds, 2.01 shares. SNSR is the Internet of Things fund, 1 share of that. And then we get back into stocks with NBEV, New Age Beverages, $3.78 per share. This is worst stock right now, worst stock by far. 100 shares, 1% of the portfolio, down $209 or 55%. Worst part of the portfolio. Not really looking to add more because this is a stagnant stock, but I'm not looking to ditch it either. How about that? After New Age Beverage, we have Galmed Pharmaceuticals, another garbage stock here. $9.40 per share, 15 shares, down $67 or 47%. I might dump this one. It's just a boring biopharma company that just doesn't do anything special. Definitely planning on dumping it, but I don't know when. Next is one of my best positions, arguably, well, literally the best. NEO, cost basis of $2.07, up $480 or 232%. That's right, tripling the money, baby. 4% of the portfolio. Love that. Tripling the money. Not planning on dipping out of this one, okay? I think this one's got a long way to run. I'll be holding on to this one long term. Just the 100 shares, though, so nothing major. I wish I could have more, but it's so above my cost basis I can't justify it yet. Following them, Plug Power, another beauty, $2.21, cost basis, 30 shares, up $91 or 137%. What can I say? Another long-term hold for me. Long term. We're talking 10 years, baby. After them, Blink Charging finally turned positive on this one, $2.32 per share, 50 shares, up $3.82 or 3%. Another, that's right, long-term holding. Following them, the last one I'm definitely going to be dumping relatively soon in Catalyst Pharmacy, or Pharmaceuticals. $5.28 a share, 10 shares, down $9 or 17.39%. One I'm probably going to dip and put this $43 to use somewhere else. So that's my portfolio. Yeah, overall all time up 25%. I really hope you enjoyed this and have a good one.